Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. With interest rates on the decline and the US economy remaining strong, more and more small and mid-sized companies are turning to business development companies, or BDCs for short, for capital. Higher interest rates are obviously better for BDCs with a lot of floating loans. So lower interest rates will result in lower income from the portfolio, but lower interest rates should result in more transaction activity. BDCs, or what we call alternative banks at Income Investors, are also a great option for passive income investors. Traditional financial outfits have to pay the government between 25 cents and 30 cents in taxes on each dollar they make in profit. BDCs pay little to no corporate tax on their earnings. In exchange for these benefits, BDCs must distribute at least 90% of their ordinary taxable income to shareholders. As a result, these companies pay out some of the biggest dividend yields out there. And it's also important to understand that not all BDCs are created equal, or rather lend to same kind of companies. For example, Texas-based BDCs might focus on lending to oil and gas companies. Or in New York-based BDCs might focus on lending to companies in Manhattan. A California-based BDC might devote itself entirely to Silicon Valley startups. And this is where TriplePoint Venture Growth BDC Corp, traded on New York Stock Exchange under symbol TPVG, comes in. John?
Yeah, thanks, Mo. Yeah, when it comes to technology companies, one knows you can make a fortune by investing in the right Silicon Valley business. Just how much you can make depends on when you get involved, though. Investors and venture capitalists like Bill Gates and Peter Thiel don't wait until companies go public. They get in on private tech stocks before they launch their initial public offering or IPO. And that's not something everyday Americans like us can do, but there is a backdoor we can use. California-based BDCs offer a loophole. These firms provide startups with the financing they need to grow their business. In return, the BDC reserves an ownership stake in these companies long before their stock debuts on Wall Street.
Makes Menlo Park, California-based TriplePoint Venture Growth BDC Corp such a compelling option. So, John, what can you tell us about TriplePoint Ventures?
TriplePoint is a BDC that specializes in companies at the venture growth stage. That comes well after the seed stage, early stage, and later stage, but just before they go public. Venture state growth companies have moved beyond product development and are generating at least $20 billion in revenue, have received several rounds of venture capital, have a solid market position, and are preparing to go public. Now, TriplePoint primarily focuses on companies in technology, life sciences, and other high growth industries. Now, it provides these companies with highly customized senior secured growth capital loans with target returns of 10% to 18% on debt investments from interest and fees. It also gets an equity stake in each company too. You can judge a BDC by the companies it invests in, and frankly, you should. It's tough to beat TriplePoint Venture Growth. It has financed more than 650 leading companies, including some of the industry's biggest names, including Beyond Meat, Casper, Etsy, Facebook, Square, and YouTube.
I see that it reported solid third quarter results as well.
Yeah, for the third quarter ended September 30th, total investment income was $26.5 million with a weighted average annualized portfolio yield of 15.7% on debt investments. Net investment income was $13.8 million or 35 cents per share. And as a result, the company generated 8.8 million of net realized and unrealized gains, resulting in a net increase in net assets resulting from operations of $22.6 million or 57 cents per share. It also funded 85.2 million in debt investments in 10 portfolio companies with a 4.5 weighted average annualized portfolio yield at origination. On top of that, 23 portfolio companies raised an aggregate $1.7 billion of capital in private financing.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, what about its dividend? I think it declared a fourth quarter dividend of 30 cents per share.
Well, since its inception in March 2014, TriplePoint's cumulative investment income consistently exceeded cumulative distributions. For the fourth quarter of 2024, it declared a distribution of 30 cents per share or $1.20 per share on an annual basis for a pretty massive forward yield of 14.65%. The fourth quarter distribution brings the company's total declared distributions to $16.05 per share since its May 2024 official public offering or IPO. On occasion, TriplePoint can also pay out special dividends. In December, the company paid a special dividend of 10 cents per share. This payment was part of the company's estimated undistributed taxable earnings from net investment income. Now, it also paid a special dividend of 15 cents per share in the fourth quarter of 2014 and 10 cents per share in the fourth quarter of 2018.
John, thank you so much for your insights. Just to recap, TriplePoint Venture Growth is a leading BDC devoted to venture growth stage companies in technology and other high growth industries. Over the past few years, the management of this BDC has positioned itself at the forefront of emerging industries, from digital marketing to biofuels to social media and healthcare. With a strong balance sheet and enviable portfolio of companies, TriplePoint's objective is to target of 10 to 18% on debt investments from interest and fees, with additional upside through equity kickers in form of warrants. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.